afternoon and happy Thursday, everyone. It's Alyssa Corum and Ed Carson here with a look at the stock market today in this shortened trading week due to the holiday. We are going to be taking a look at the major indexes, some really key action that we're going to break down for you this week, as well as a look underneath the surface, Ed. There were a lot of really good looking moves in individual stocks today. And you're on mute. He's speechless at all the
speechless. Once again, we had more chip stocks breaking out. Qorvo is the latest among those. Google definitely made a bullish action today, and another FANG stock, this one Diamondback Energy, that one moved bullishly from its 10-week line as well.
Okay, great. Can't wait to get into all of those. First look at the Nasdaq. Here is the candlestick chart on Thinkorswim as Ed zooms in there a little bit. So a really nice gain on Friday for the tech heavy index, up about 1.8% to close out the day. We had the S&P 500 up 1.2%, the Russell up 1.3%, and the Dow up about 0.5%. So Ed, the Nasdaq has been lagging. We finally got a day 18 follow through day from the Nasdaq on Wednesday, and a big pop today above a key level.
Yeah, I mean, this was a really important week because we'll look at some of the other indexes, but the Nasdaq had been below the 50-day line, below the 21-day line, below the bottom of this regression channel. And so just a lot of negative action in that field. So yeah, the Wednesday sort of quasi follow through, it's unclear if we really needed it, but the Nasdaq has been acting like a correction. Today's move, it looks like volume might be slightly higher. That's still tentative. So that was also strong, getting above the 50-day line. There's still this area that I think we want to see this get over and to really feel confident. But there's definitely been a lot of action, not just in the Nasdaq, but also some tech stocks like Google, like Qorvo, and a lot of other things that makes you feel more confident about the Nasdaq and the broader market rally.
So some potential areas of resistance that we still want to see the Nasdaq clear. And it's very important, I think, right, Ed, for the Nasdaq to now hold this recently retaken 50-day line.
Yes, I mean, and that, these last couple of days, really important. You really want to hold the 50-day, really want to hold the 21-day. So those are a given, definitely need to do that. But if we can get over this last step, I think then we can all feel like the whole rally is moving together and, and get out of this sort of the bifurcated rally that we've been talking about.
And let's take a quick look at the weekly chart for the Nasdaq as well. We always like to take a step back and look at that perspective. The Nasdaq gaining about 2.5% or more, it looks like, for the week. So we finally got another big blue bar. It's they've been a little few and far between in the past number of weeks since those prior highs.
That's right. And you can see how we closed basically right at the highs. It was really just strong action after, a lot of negative action, getting above these areas, just starting to feel like, you're moving forward, getting above that upside resistance. So yeah, it was very nice to see this move.
And another thing that we were concerned about was the weakness in big cap technology names. So we want to take a look at QQQ, the Nasdaq 100, which also notched a significant gain on Friday to close out the week. It's now back above its 50-day line, and it looks like it's just above those other highs from this middle of the consolidation there. Do you feel like it would have been better to see the Qs close a little higher, or does it feel like it's in a pretty good spot at this point? I feel like Chris was saying 325. I'm not sure if it quite made it there.
I mean, the higher, the better, the further away, the better. Always.
Of course.
Yeah, always. But, it's nice. And especially you want the Nasdaq to get above there too, but it's nice to see especially when you consider why, what's dragging down on the Nasdaq.
Right.
Well, honestly, it's these the high growth names, the Tesla, Teladoc Health, all had big runs. Right now, they're not doing so well. I mean, overall, some of them rallied this last week, but they're still well below key levels. So some of the healthier parts of the tech market, those are doing well. Yeah, and we're definitely above all this kind of area, all this resistance spot. So yeah, if we can keep moving there and pull up the rest of the Nasdaq, we'll be in really good shape.
And the Russell 2000, we also want to check in on small caps by taking a look at IWM. The Russell getting back above that 50-day line on Friday. That was a little bit of a concern. Seeing the Russell pretty much round trip all of those gains from that sharp move off of that first pullback there in February and March. So good to see the Russell now back above the 50-day too.
Yeah, that really is, quietly one of those things that, we don't talk about the Russell, or we do a fair amount, but usually you don't hear too much talk about the small caps. But when that was coming down, it's like, oh boy, now more indexes are joining the Nasdaq on the downside. Right. Now at the end of this week, not only is the Nasdaq improving, but the Russell is above the 50, it's above the 21 fairly convincingly. So, those two factors really make you feel better about the market.
Yeah, because earlier in the week, that 50-day was proving to be a resistance level. So we like where the Russell is now, but just like the Nasdaq, we want to see it hold that level. Let's quickly look at the S&P 500 and Dow. The S&P sitting pretty here at highs and crossing that 4,000 level for the first time.
Yeah, in many ways, you could say the S&P is taking the reins from the Dow, because you got the combination of some old economy names and then some new economy with the bigger techs. So, I mean, it's really nice to see the S&P above 4,000. It just looks really strong.
And the Dow really quickly as well, trading in a pretty tight range for the last couple of sessions, but right up there at highs as well.
That's right. So nothing wrong with that going on.
Okay, well, we mentioned the strength in the chip sector, which was really it seemed like the standout area in technology for the last number of weeks, as we saw a lot of setups in that area, seeing some breakouts this week and today in particular. We want to take a look at Qorvo, ticker QRVO, gaining almost 6% to break out of this base here. Ed, what do you think about Qorvo?
Yeah, it's nice action here. I mean, you can see the volume was sort of the heaviest in several weeks, pretty much the heaviest since the left-hand side of the consolidation. The buy point was probably 185.96, just above the top of this sort of messy handle. So it's, right in the buy zone. I think the buy zone is up till about 195. So still in range from that. RS line is not a new highs, but it's at a short-term high. So a lot of things to like. It's a 5G play, an Apple iPhone supplier. It's nice to see that a whole sector move up. Chip gear, really, really strong. Starting to see some chip makers as well. This is definitely one of the first ones that's breaking out. You probably want to have some exposure to the chip sector, whether it's with a specific stock or an ETF.
Right.
Because this is definitely one of the leading groups right now.
Yes, and you pointed out a lot of the great fundamental and technical qualities, and many of those factors can kind of be summed up in the IBD composite rating, which for Qorvo is a 99. So that means it outperforms 99% of all stocks in our database across a variety of fundamental and technical metrics. So that's always really nice to see. And moving on, let's take a look at Google, ticker GOOGL, gaining 3.3% today. We put it on leaderboard when it was clearing a trend line. Looked like Google needed a little bit more time to pull back to its 50-day or the 10-week line. All the while, though, really maintaining support at that nice round number of 2,000, but picking up steam this week for sure.
Yeah, just every day kept on going, getting above the 21-day. Today, it broke a trend line. There's actually a 3 weeks tight on a weekly chart that essentially gives a buy point of 2114 within this flat base. So those are a couple of buy signals, plus the 10-week line bounce. And then it's also a closing high. So there's a lot of little subtle, buy signals in there. Still, the official buy point is here. One thing is that the RS line isn't great, but if you compare this to the Nasdaq, this would look pretty good. This would look pretty good. This is comparing to the S&P, which is what we want to look at. But there's not too many techs that were doing this along the chip gear makers and such. But this is doing pretty well, and the estimates for 2021 are pretty strong, given that it had a decent 2020.
Yeah, that definitely puts it into perspective. So yeah, not only is it on leaderboard, it's also on Swing Trader as well. So a lot of nice technical action here for Google, and a nice move here today from Diamondback Energy, ticker FANG, closing up 10.5%. We've been tracking this oil and gas play as it's been pulling back to the 50-day line, cleared a short-term resistance level today, and really powered higher. And I believe this one was added to Swing Trader as well today.
Added to Swing Trader is stock of the day. Yeah, nice action here, really powerful moving. Crude oil prices rose. There was an OPEC Plus meeting, and obviously the reaction from that meeting has been fairly positive. Yeah, you can definitely see the trend line here, retaking the 21-day, on a weekly chart, rebounding from the 10-week line. And so nice action there. It's actually a little extended from a 10-week perspective. You could probably still buy it off the trend line, but this is the end of the week. On Monday, this 10-week is going to move up quite a bit. And so, come Monday, this might be within 10%. We usually say, well, that's where you want to buy it. This might be okay. And especially if it pulled back just a touch, that wouldn't look so extended anymore. But, we're building the right side of a base. And so maybe, there might be other opportunities with this and other energy names. This is moving on oil prices. So there's definitely other stocks in this field that you may want to take a look at, or take a look at ETFs, either for oil drillers or for oil itself.
Yeah, such a good point. And really strong industry group, number 7 out of 197 groups that we track. You may look at the fundamentals over the last couple of quarters and see a bunch of red there. But if you look ahead, those estimates are looking pretty good there, Ed. And it has some interesting elements to the chart. And like you said, maybe if you're looking at it compared to the 10-week line today, might feel a little extended, but that's where those alerts on trend lines or even price points can come in handy on these charts. That's definitely what I did when we had it on our radar earlier this week. So that way I could act accordingly before it shot up over 10.5%. So we'll keep tabs on this one and have our line in the sand as well. But now that we are wrapping up, let's talk about our game plan for the week ahead. It feels like there's finally a little bit of a notable shift in a positive direction. I mean, we've been saying that the market is in an uptrend with the strength that we've seen in the S&P, in the Dow, but now the Nasdaq looks like it's joining the party, Ed.
Yeah, it's sort of tentative, but it's definitely on that verge. So it's definitely looking like a broader rally. And honestly, it's very important to look at the market. But if you didn't look at the market, if you just looked at breakouts and stocks that were acting well, there's a lot more breakouts and they're working. I mean, that's, a couple of weeks ago, there was a number of breakouts that started fizzling from all types of sectors. And that was one reason why, we briefly went to market under pressure. Right. So, I mean, there's just even if you didn't look at the indexes, the market action is strong, and you should look at the indexes, but, so it's a time to be adding exposure. There's a lot of sectors that are doing well, the chip sector, the broad housing sector, whether it's a home builder or, a floor and decor type situation, or there's a lot of different sectors there. Still some steel makers, on some of these tech titans. So there's a lot of areas that you may want to be thinking, I can increase my exposure somewhat. Don't need to get too aggressive because it's still maybe not a rip-roaring April to September rally. But, let the market draw you in. If your breakouts are working, that it's a sign that maybe you can step up a little bit.
That's a great point, Ed, because the Nasdaq still needs to prove itself. We're not in the all clear. So now it seems like these breakouts that we're seeing now really need to prove themselves. We can't just kick back and relax now that we did get that follow through day on the Nasdaq and just think, all right, all of my breakouts are going to work. I can get back to being really aggressive. Doesn't seem like that's quite the case at this moment. It could be, but there's still some things that might need to be sorted out first.
Yeah, I agree. And actually, if you're really just hankering to be doing something, one thing you can do is honestly really work on those watch lists and drop alerts. We use it with MarketSmith or whatever it is, whatever service you use. Because as you're right, that's a great point. Diamondback eventually ran up 10%. So you don't want to just be middle of the day, finally notice it. You want to be paying attention to it. So what stocks you're targeting and can be paying attention to it. Hopefully a variety of stocks and a variety of sectors. So you can you have your eyes are aware of different things going on, because it's like I sometimes neglect the oil stocks. Like, well, I want to put some alerts there, so at least I'm paying attention to some of it. And the same thing with chips, same thing with travel, same thing with all those things. So you know what's going on.
That's right. And we don't want to just be buying any breakout that we see or any stock that's going up 10%. We still want to be very selective. So you need to thoroughly analyze those stocks in your watch list and make sure that they meet all the criteria that you would feel comfortable adding them to your portfolio, because the stronger a stock is on a variety of fundamental and technical metrics, the more you're improving your odds for success.
That's right. Buy the right stocks and buy at the right time. That makes a big help.
Yes. All right, everyone. Thanks so much for tuning in today. We hope you have a great 3-day weekend, and we'll see you back on Monday morning for another episode of IBD Live. You can check out investors.com/IBD Live for all the details, and then we'll be right back here after the close on Monday. We'll see you then.